Financial inclusion has been regarded as one of the most critical drivers of economic growth. This is because access to financial services have so far been proven as a means of empowering people in various ways. Over the past few years, financial technologies have gained prominence in the African continent, especially Nigeria, as an effective tool to bridge the financial inclusion gap. This, in the long run, has created an increase in consumer adoption of FinTech solutions and attracted numerous investments. However, despite the strides, more needs to be done in the area of beefing up financial literacy campaigns such that individuals not only have access to these financial products and services, but are able to convert them to improve their financial status. This week's guest, Ezinne Obikile, the Executive Director at SystemSpecs, shares how we can deepen financial inclusion.
Ezinne, glad to have you on the show today.
Thanks, Fred, for having me.
All right, let's start with an understanding of how Nigeria has fared in trying to reach the unbanked.
Okay, thank you. Over the years, the central bank has implemented various policies and regulations to improve financial inclusion. And I remember, I think it was in the 2016 review of the National Financial Inclusion Strategy that the target of 80% inclusion by 2020 was reached. However, this was again revised to 95% inclusion by 2024. Although official statistics are not out yet on what the numbers are as at 2020, but going by what the NIPS has published, which is 47 million, about 46 million BVNs enrolled as at February 2021 this year, one can safely assume that almost 54 million Nigerians still do not have bank accounts. Okay, so the official survey that Elfina did as at 2018 put financial inclusion rate at 63%, which was indeed an improvement from the 58% that it was at by 2016. But even at that, if you consider what other African countries are doing, that looks very, very pale. Kenya has about 85% financial inclusion and South Africa has 90%. So from that perspective, you can clearly see that a lot still has to be done in the area of financial inclusion.
Okay, but what are some of the factors that you think is affecting this rapid growth that we should expect to see in reaching the unbanked?
The major problem, has been in several factors really, and I'll just touch on a few. The first one is, we don't have enough bank branches, let's face it. The banks will never, it costs money to set up a bank branch, and you don't have too many of them in the rural areas because the economics is not just right. Again, with the licensing of mobile money operators, one would have thought that we will have moved a bit more rapidly than we have now. But again, the MMOs also prefer to operate in urban cities. You hardly find a good number of them in the rural areas. So reach is a problem. Accessibility to financial services is a problem to financial inclusion. Also, the low density in the agent network. We don't have enough mobile money agents. SANEF has done a very great job working with other stakeholders in growing the number of agents. I think we had less than 100,000 agents 2 years ago, but now we're in the region of 580,000, 600,000 agents, okay? If you extrapolate, you can see that gives an agency ratio of one agent to 350 people, which is still a lot. Countries like Kenya, Bangladesh, they have less than one agent to 150 persons. So if you look at it from that perspective, we still need to enroll at least 1 million agents to begin to compete with countries like Kenya and South Africa. So the agency network is an issue. Then KYC challenges as well. It costs a lot of money to acquire KYC documentation. Okay, be it in BVN. You find that most people in rural areas, they don't even have BVN. They don't have verifiable addresses. So a lot of times, you want to onboard them on platforms, you can't because they don't have the required documentation. So that has been an issue as well. Then poor infrastructure too. You don't have enough broadband services, data services in the rural areas. So no matter what you want to deploy, if you don't have network, you can't access services. So these are some of the problems that has actually affected financial inclusion generally, particularly in the rural areas.
So as a fintech, what are some of the ways you are trying to add value despite all the challenges?
Okay, so what we did, for SystemSpecs, all our solutions were actually built with financial inclusion in mind. Okay, so because of the nature of the merchants that we also serve, you know that Remitter is a flagship product today. It's used by both government and the public sector and the private sector, And the payers, be it school fees, hospital bills, etc., are people that are located in both urban and rural areas. So in designing our payment systems, we are careful to include, multiple delivery channels to ensure that payments are accessible to everyone. Our payment gateway has multiple channels that you can use to make payments, and we have integrated with both microfinance banks, mobile money operators, and have APIs that we use to integrate our services to them so that we can extend it even beyond our immediate environment. So you go to any part of the country today, you can make a remitter payment either through a mobile agent operator or through a microfinance bank or the nearest bank branch to you. So we have consciously designed our solutions to accommodate everybody, both the unbanked and the banked.
Finally, this is probably a two-in-one question. Is number one, how do you see emerging technologies like blockchain, cryptocurrency, how do you think they would affect the future of fintech? And what are fintechs also doing to ensure they stay ahead of the game?
Okay, thanks, Fred. You know that blockchain is still an emerging technology, like you are sure of. And a lot of countries, the only implementation that we have seen that has been widespread has been in the area of cryptocurrencies, which a lot of central banks are not comfortable with because you don't actually have any control, over those transactions. However, there are other applications of the blockchain. Being a distributed ledger technology, it can be applied to several uses. Okay, so the area that comes to mind, even as we're discussing financial inclusion, will be in the area of KYC as well. It is possible, and research is ongoing to prove that it is possible to store digital identities on the blockchain such that all participants in that block will have access to such identity. So once one service provider has onboarded a customer's digital identity, other people can use it without having to repeat the same process, as well. Another area that's, like I said, still largely being researched is in the area of hosting global bank accounts, such that the unbanked can actually log in, create a virtual bank account without the need to establish a physical bank account with any commercial bank. These are still, areas that are being researched. And whilst the technical research is going on, it will be necessary for financial regulators to also try and understudy that technology, and so that they can enact appropriate regulations that can guide practice when eventually it becomes widely adopted.
Interesting days ahead, isn't it? Thank you so much for being on the show today. I wish you all the best.
Thank you, Fred, and have a lovely day.